Hi guys. Today we will analyze Tyson Foods stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. There are some doubts in the very recent evolution. The short term is neutral, but the long-term trend is still looking good. Support levels are around $90, $85 and $82. The next support levels are around $75 and $70. Resistance level is around $93.90. The next resistance level is around $100. In the last month the stock has been trading between $88.30 and $100 range. It is currently trading near the lows of this range. The stock has an average volume of 2.5 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 6% per year, for last 5 years. We see that the average profit margin of the stock has been around 6% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 85% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Tyson Foods Company: bad, average, and good. First scenario. Tyson Foods will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 1%. Future profit margin would be low, 4%. Future free cash flow to net income rate would be low, 50%. In this case, the fair value of the stock today would be $89. Second scenario. Tyson Foods will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 2%. Future profit margin would be average, 5%. Future free cash flow to net income rate would be average, 65%. In this case, the fair value of the stock today would be $146. Third scenario. Tyson Foods will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 3%. Future profit margin would be high, 6%. Future free cash flow to net income rate would be high, 80%. In this case, the fair value of the stock today would be $221. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 10.67. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Tyson Foods, analysts forecast growth rate around 3% per year in next 5 years, and future P/E around 11. Again, I will use 3 different scenarios for Tyson Foods Company: bad, average, and good. First scenario. Tyson Foods will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 1%. Future P/E would be low, 9. In this case, the fair value of the stock today would be $38. Second scenario. Tyson Foods will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 2%. Future P/E would be average, 12. In this case, The fair value of the stock today would be $55. Third scenario. Tyson Foods will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 3%. Future PE would be high, 15. In this case, the fair value of the stock today would be $75. As you can see, today the stock is overvalued, $90, even if we expect the company's high performance in future. The fundamentals are good. And the stock is currently fairly priced. However, in the coming 5 years the revenue will grow only by 3% on average per year. The stock's current low valuation adequately reflects the company's near-term challenges. I will put the stock on my watch list. Company's strengths. Tyson Foods is one of the world's largest suppliers of beef, chicken, pork, and prepared foods, with sales in about 145 countries. Tyson's customers include fast food restaurants, food distributors, grocery stores, military commissaries, and wholesale clubs. The company has one of the most diversified business models among protein peers, given its relatively balanced portfolio of beef, pork, chicken, and prepared food products. Tyson is well positioned to benefit from the growing demand for protein, particularly overseas, as most of the protein consumption growth is expected to occur outside of the U.S., mostly in Asia, over the next decade from population and income growth. Tyson is expanding capacity overseas to help capture this growth. The company is generating solid results in its retail business and should see improvement in the food service channel, restaurants, hospitals and school cafeterias, as the economy reopens. Tyson has a healthy balance sheet, strong ROE, and ample financial resources. The company's return on assets of 10% and return on equity of 20% is amongst the best returns of the industry. It has a profit margin of 7%. This is amongst the best returns in the industry. Risks. Tyson's inputs consist of live cattle, hogs and corn and soy. These inputs are affected by disease and drought and could increase the company's input costs, irrespective of demand. Tyson's profitability reflects high plant utilization, and weak demand could undermine management's efforts to improve margins. Consumer preferences for healthier food are a risk for Tyson. Prolonged input, labor, and transportation cost pressures. Management could also fail to generate the expected synergies from acquisitions. More than 12% of the company's revenue is international, and unfavorable exchange rates could lower reported sales. Based on estimates for the next 5 years, Tyson will show a small growth in revenue. The revenue will grow only by 3% on average per year. The earnings per share is expected to decrease by -1% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.